Hello and welcome to this week's Australian Share Market Report. I'm Dale Gillam, Chief Analyst at Wealth Within. This week I'll be discussing Warren Buffett's approach to investing, the All Ordinaries Index and the Australian dollar. Now before we jump into the report, I'd just like to mention if you have any thoughts on investing, please comment below and subscribe to our channel to keep up to date with our new content. So let's get into this week's report. Warren Buffett, also known as the Oracle from Omaha, is arguably the greatest investor of all time. Buffett is the CEO and largest shareholder of Berkshire Hathaway and has amassed an astonishing $82.9 billion in personal wealth, making him the third wealthiest person in the world. So how did he do it? Well, one thing my mentor said to me when I was young was to find somebody who is successful and in a position where you want to be and essentially copy them. Warren Buffett has had incredible success sticking to his principles in the stock market, and yes, he had a mentor in his early days. To me, there's no surprise as to why his philosophy to investing is so popular. So how does Warren Buffett invest and why is he so successful at it? Well, what follows are 8 investment tips or insights from Warren Buffett, and I'll break them up into 3 parts. And so this week I'll be discussing the first few and the remaining over the next 2 weeks. Now the first one is long-term value investing. The Warren Buffett strategy is a long-term value investing approach passed down from his mentor Benjamin Graham and his school of value. Benjamin Graham taught the long-term value investing strategy of purchasing stock at a price below their intrinsic value, then holding them until their price reflects the real value of the company. According to Buffett, the secret to getting a better return on investment is to buy a stock and forget about it. He believes in having a buy and hold mentality and insists on holding stocks for decades. He is quoted as saying, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Further, he states that if you constantly buy and sell stocks, it will take away a significant percentage of your returns in the form of trading commissions and taxes. So it is better to buy a great stock and hold them for a long time. Now, whilst I agree with Buffett on most things, as a trader I have some slightly different views on this, as modern day technology has made brokerage very cheap and pretty much insignificant in the big scheme of things. Further, the ease and speed of transactions that can be achieved in today's market means that holding stocks for long periods means you cannot compound your returns like you can with buying low and selling high. Even after factoring in capital gains taxes, I found that there is great value to be had in actively managing your portfolio rather than having a passive buy and hold approach. Remember, Buffett has been investing for over 76 years, and times have changed. It also takes time to build a fortune, and even Buffett did not amass 99% of his wealth until after his 50th birthday. Now, I totally agree with him in that you should stick to investing in good stocks. I also agree with Buffett when he talks about not letting fear and greed change your investing criteria and values. This means you need to avoid being overwhelmed by outside forces that affect your emotions. Most importantly, never sell into panic. All great pieces of advice, which sadly most investors or traders do not adhere to. Diversification is the next area. And he says diversification is not always a good idea. Now, many good investors stress the importance of diversification. In fact, it's an industry mantra. But Warren Buffett tends to disagree with the idea, and so do I. Buffett says that diversification is for people who do not know much about investing. And I have to agree with that. An experienced investor should choose stocks on a long-term basis and should have faith on his or her investments. Now, investors diversify their portfolios because they are afraid that any one stock might sink their entire portfolio. So by diversifying, they attempt to reduce the volatility of their portfolio. But at the same time, they also reduce their focus on individual investments. Now, what I've found in my research is that this focus on diversification has the effect of reducing portfolio returns. So here, Buffett and I totally agree. Buffett waits for opportunities to buy good stocks, and when those opportunities come his way, he takes full advantage. According to Buffett, when it's raining gold, put out the bucket, not the thimble. And I totally agree. Now that brings us to the end of the first part, and next week I'll continue with more of Buffett's insights. So what do we expect in the market? Okay guys, as you can see on the screen right now is a weekly chart of the All Ordinaries Index. Now last week or the last couple of weeks, you may have remembered me saying that I thought the All Ords was due for a little bit of a pullback. And as we can see here, the current week or the last week on that bar chart you can see is the 18th of May or Friday the 18th of May, and the market closed at 6190.9 points. Interestingly, as I was talking about the week before, the market was due, it is due for 1 to 2 weeks of falling, possibly maybe 3 to 4 weeks, but I'm thinking sort of 1 to 2 weeks coming back. Now, interestingly, it's right up near that previous high there at 6256.5 points. Last week, it did hit up at 6245 points. So it's pretty close to that level before turning and trading down lower during the week. So it wouldn't surprise me if this next week or the next couple of weeks we're down on our market, because as I said, we've got 1, 2, 3, 4, 5 and a bit weeks going up, and it would said to me we need to have 1 to 2 weeks coming down. So how far can it go down? I can tell you that. We can just get rid of this little tool here. What I'll do is I'll put another little tool on here from this low. Here's my price retracement tool, and all I'm doing is measuring the range from that low of 5834 back in, what's the date there, on the week ending the 6th of April, right through to that high here from the 18th of May, so the high of last week. Now what we would normally expect is it to fall down to around that 38.2% mark, which is a Fibonacci ratio, or down to that 6,039. I'd like to see it hit one of those two. The higher one would be the better one. If it does come down to one of those two levels and start to turn up, then it will be a really, really nice rise up for the coming weeks after that. So moving into the third quarter of 2018. So I'll just show you what I'm thinking there. If it does rise up from those points, I just moved my little thing. So what I want to do is just put another tool on it where I'm looking at this range. And I'm going to project this sort of range up from another point. So what I would be looking at here, and you can see here, I'd be looking at it moving up to around that 6,400 to 6,500 point mark through into that third quarter, possibly into the last quarter of this year, but at least into that third quarter we start seeing a move through that previous high of 6,256 points and moving on up in a nice strong bull market. If it does fall further than that level there at 6,038 that I've got marked, I'll just get rid of this. If it does start falling and it falls for 4 or 5 weeks, then my opinion will change on that. So right now, it's just sit back and wait, because you might get some good opportunities coming up. So over the next couple of weeks after it does fall, and when it starts to move up again, you'll get some nice opportunities to buy in some great stocks. So let's go and have a look at this week's stocks. Now, I've got a question, or not actually a question, I've got some recommendations for this week's report from one of our great viewers here. He's made a few comments on some of our videos, and he's saying about how about with all the banking hype, what about the little lenders? And he's talking about Afterpay with a stock ticker code of APT versus Zip Money, or the ASX ticker code is Z1P. And he said, are they good investments? So basically what we'll do, let's get into those stocks and we'll actually have a good look at them to see whether they're good investments. So, okay, on your screen right now, we've brought up Afterpay, and I'll just zoom up on the left-hand side there. You can see the monthly bar chart, weekly bar chart on the right, and having a look at these. Now, to me, it's a lot of people go for some of these small stocks, and I'm not really sure why, but it looks quite an illiquid type of stock to me, these sorts of things, and it has done really well. Afterpay came onto the market with a bit of hype. There we got back in June 2017, opened at 270, and it's around about that $7 mark. So it's done very, very well since it floated. You can see here that it is closing at this point in time in May, and it's closed around $7.07. So interesting here, here's your current week or last week, which is the week ending the 18th of May. As you can see, they're closed at $7.07, but the close is quite low. It's right down on the bottom of the bar. Now, interestingly, just looking at this, there's not a lot of data on it, so it does make it a lot harder to analyze because we don't have a lot of history. I'm going to put some volume on it. I'm just going to find my little volume. Let me just go to my tools, type in volume. Okay, and then I'm going to put that on the bottom of the chart and have a look at that. So you can see volume here. Volume often on stocks like this, it actually helps us understand the future of that stock and whether it's been widely supported and what's going on. You can see here how last week, where it opened low and closed low after trading up, it had very high volume, which is saying there's a lot of participation going on there. 7.3 million shares were traded in the week, so a lot more than the previous week. Generally what you'd want to see, if it was closing high, I'd be much more excited about it. I think there was a lot of buying earlier in the week, and then there's a lot more selling coming in later in the week. But remains to be seen how high this stock can actually go at this point in time. If it can't get through this sort of $8 area, then I would suggest it's probably overheated. A lot of stocks, when they float on the stock exchange, especially floats. I don't actually buy floats, and a lot of people say, why don't you buy floats? It's simply because they are high risk. And generally speaking, the research is that 50% of floats you can buy within the first 12 months at a lower price than the float price. And because you really do need to get it on the market for the market to settle in. Now, some people do stag profits in floats and trying to get it as they rise up out of the float. And obviously this one you could have bought in and made a bit of money from that float straight away. Now, there could be a lot of people taking profits right now, and that's one thing that's in the back of my mind, that we might be seeing profit taking for it to move down. But as I said, the all-important point here to me is that sort of $8 level. If it doesn't get through that, then we might see it pull back to a much more sustainable trend. How does this compare with the other stock that we just mentioned? We're talking about Zipco. Looking at this, or Z1P it is. This one's been around a little bit longer. As you see here, it's done a beautiful rise right up into February 2018 at $1.34. Very, very strong rise. But again, whilst it's a nice little rise it's had, but it is looking quite weak to me. We're looking over at that weekly chart. We're seeing since that high, it's had a big fall, coming right down from that $1.34 high. Current trading here as of Friday the 18th of May is down at 81 cents, so massive fall there. It wouldn't surprise me if it kept coming down and it stayed around these sorts of levels back under that dollar mark. Let's go and put the volume on that one as well and have a look and see what volume's been doing on that. You can see here how volume's quite low. It was rising right up into that peak, and you do see that most of the buying comes in at the end of a run, and you'll see that on stocks where they'll be traveling along at a certain rate and all of a sudden they'll spike, and when that spike happens, that's when you know that the end is nigh, and it's going to start to fall away after that, because you can't go up at those speeds for too long. So at this point in time, I don't think there's much in this stock at this point in time. It's not a stock that I would actually trade myself. If you are wanting to speculate on those sorts of stocks or this sort of stock, I would put small amounts of money in it, stuff that you can afford to lose or hang on for a very long time. But generally, to me, it's not an exciting stock for me. Either of these two stocks are not really exciting for me. I'd rather prefer the bigger stocks. So that's it for this week's report. So I hope you've enjoyed my take. If you want me to have a look at some stocks for you, just shoot it in an email or comment below on our Facebook page and just say, hey Dale, can you do this next week, or have you got a question? So please do that. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on Soundcloud and on our website. Now, they're jam-packed with valuable information which will help you elevate your trading. Now, if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.